Alrighty, traders. This is Blake Morrow. You are listening to the Daily Roundup webinar. I know there's a lot of people actually watching the inauguration right now. It is a pretty, I was just watching it as well. It's a historic day for a lot of reasons. Obviously, when there's a change of leadership in the United States, it doesn't matter, who is being inaugurated. I've watched, I think, every one of them. And today is no different, although I've obviously paused it to be here with you guys. But what we are seeing is we're seeing a move into all-time highs with equities. So we have this S&P that's moving towards channel resistance. We have the NASDAQ that's hit all-time highs and extending gains once again. And the currency market is responding to that. We're seeing a move higher in the Aussie and the Kiwi today, although things are slowing down just a little bit, and I'll talk about that here in a second. But overall, we are seeing, dollar weakness against commodity currencies, emerging market currencies, and that's a product of, equity markets continuing to stretch their legs. Now, one of the things that I've noticed, and I'm gonna pull up the Aussie really quick. I'm paying really close attention to the Aussie dollar. And I told everybody in the chat room, in the event that the Aussie break, and I'm not going to say that it's going to happen. I'm just going to say that in the event it does. If the Aussie breaks back below, you can see I have an alarm set here at 77.20. If we break back below that level, I'm going to start looking for a reversal in the markets as a whole. Right now, like I said, we're stretching, we continue to stretch higher. It doesn't look like equities want to stop, but that's something that's got my attention right now, that the Aussie is underperforming. You take like this move in the equity markets, you look at the Aussie yen is actually near its session lows, right? And that's not normal of of this behavior that we'd see when equities rally like they have. The Kiwi yen, it's up a little bit, but not very much. We saw the Bank of Canada make their move today, but so the Canadian's kind of doing its own thing. But keep an eye on the dollar Canadian, because we did break a trend low, but as you can see, it ended up being a false breakdown, at least for now. So those are behaviors, like I said, that you typically won't see in a risk on environment. But if stocks continue to grind higher, I don't know if the market's going to have any other choice but to sell dollars. I mean, it probably will continue to take place. We are seeing currencies like which I'm bummed out about, because the Euro New Zealand is slumped all the way back down towards my entry point. But again, when you have a big rally and risk like we've seen, it's not surprising to see this move. I'm just hoping that we hold, around these levels. And obviously what needs to break, for this particular pair, is we got to see 171 being broken. That's the recent highs, but also you can see here, if I grab this fib, okay, that's the 50% retracement. And so if we break that plus the downtrend line, then that means that the long Euro New Zealand trade is really going to take off. But it was a big rejection overnight, which makes sense based on equities moving higher, although I'm not happy about it. It is happening. The Kiwi, this is another one that I was watching, obviously very closely. I was watching the neckline here. I have a short in the New Zealand dollar. We could reach for 72 cents. That's possible. But I'm also just keeping an eye on the Kiwi. If we dip back below like the 71.40, then that's gonna, signal to me that, maybe risk appetite's gonna wane a little bit. And that's why I'm keeping an eye on the Aussie, because they're only, the Aussie is only 20 pips away from, starting to take out some support. One other point I'm going to make here is Citigroup. I think it was Citi. Let me double check this. Let me just double check. Yeah, Citi took a long Aussie dollar at 77.35 this morning. That was this morning, pre rally that we saw in equities, right? So before equity markets took off from 3,800 to 3,850, Citigroup, hold on one second. Whoops, I almost dropped something. Citigroup went long the Aussie dollar, basically 2 pips from where we're at right now. So, how many traders, institutional or otherwise, how many people sold dollars, bought, Aussies, bought Canadian dollars, bought, Kiwi, whatever, maybe even bought the euro, and they're not getting paid for it. So that's why if we do see a reversal in like the Aussie and we start to see stops getting taken out, what is that? What does that do to risk appetite? And that's kind of what I'm viewing at this moment. There's still a lot of day left in today. It is, a brand new day for the markets. Part of me I sit here and I look at the equity markets and I'm like, okay, we're going to get past COVID, hopefully, here in the next 6 months or so. We have all this liquidity hitting the markets. The economy is probably on pace to do really well over the next 12 months. I would say the next 12 months, you're going to see, pent up buying happen. You're going to see, growth substantially grow based on liquidity. We're going to have infrastructure spending. We're going to have a lot of spending. But has the market priced all this in? And at what point does the market start to worry about more regulations and higher taxation? I know right now in this moment in time, that's not what the market is concerned about. But that is something that, I think about as equity markets continue to rally to new highs. It's like, okay, I see the reasons why they are, but is it priced in? And obviously, we'll find out in the weeks ahead. I'm assuming. Just technically, just realize that the S&P is near channel resistance, and that's something that we should all be paying close attention to. We're only maybe about 10 points away from the channel top here. And that has contained price, since the end of November. So, all right, guys and gals, I want to thank you for all your support. Thanks for being here today. I appreciate each and every one of you. I'm going to get back to watching the inauguration, finish that up, and let's keep an eye on remember, I'm watching the Aussie today. Aussie back below 77.20 is going to start taking out some stops. And the false breakdown in the dollar Canadian is something else that I'm keeping an eye on. All right, guys, talk to you later. Bye-bye. Thank you.